Welcome to BigONE Weekly News Update. I'm Gavin. Crypto markets extended their recovery for a third consecutive week as Bitcoin remained resilient despite shifting macro conditions. While institutional demand has yet to fully return, easing ETF pressure, fading sell-side pressure, and changing dollar dynamics suggest the market may be entering a more constructive phase. Crypto market extends weekly gains. Bitcoin gained approximately 1% over the past week, closing near $64,800, while Ethereum outperformed with a roughly 3% increase to around $1,860. Solana slipped about 1% to $76, while Hype lagged behind, falling nearly 9% to around $60. The broader risk market showed mixed performance. U.S. equities faced pressure from semiconductor weakness, with the Nasdaq falling nearly 3% for the week and the semiconductor index declining almost 10%, entering bear market territory. Meanwhile, oil prices rebounded, treasury yields moved higher, and gold gained more than 1% as geopolitical concerns resurfaced. Real yields remain Bitcoin's biggest headwind. Despite Bitcoin's resilience, the main challenge remains elevated real interest rates. The U.S. 10-year real yield climbed close to 2.4%, its highest level of 2026, while the dollar remained above its 200-day moving average since May. However, broader financial conditions remain stable, with equities near record levels, tight credit spreads, and subdued volatility. This suggests Bitcoin's weakness is not being driven by broad market stress, but rather by the opportunity cost created by higher real yields. Bitcoin begins reacting positively to good news again. A key change in market behavior has emerged. Bitcoin is once again responding strongly to positive catalysts. Following a softer-than-expected inflation report, Bitcoin rallied more sharply than major traditional assets and outperformed both U.S. and European equities. After a month of consolidation and bottom building, the market appears increasingly sensitive to favorable developments. Historically, this type of price reaction often indicates that selling pressure has weakened and buyers are waiting for confirmation before returning. Dollar liquidity becomes the key driver. Bitcoin's relationship with traditional markets is changing. Since the winter, Bitcoin's correlation with U.S. equities has weakened, while its inverse relationship with the dollar has strengthened. The asset is increasingly behaving less like a high-beta technology stock and more like a liquidity-sensitive asset that benefits from dollar weakness. If global liquidity conditions begin improving, the dollar channel may become the most important driver of Bitcoin's next move. ETF selling pressure is easing, but demand has not returned. The pressure from U.S. spot Bitcoin ETF outflows has moderated significantly compared with the extreme selling seen in June. However, institutional demand has not fully recovered. While investors appear to have stopped aggressively exiting positions, consistent buying momentum has yet to return. The next major signal for Bitcoin will likely come from whether ETF flows transition from stabilization into sustained inflows. Long-term holder selling may be nearing completion. Another positive factor is the potential exhaustion of long-term holder distribution. During Bitcoin's major rallies in 2024 and 2025, large amounts of previously dormant coins moved on-chain as investors took profits. However, the volume of older coins becoming active in 2026 is projected to be less than half of last year's level, suggesting that this supply pressure is gradually fading. A reduction in long-term holder selling could provide a stronger foundation for future upside. Key events to watch. Markets will closely monitor several upcoming catalysts: U.S. earnings season and whether capital returns to AI and semiconductor stocks after the recent sell-off. Further developments surrounding the Clarity Act, with a potential Senate vote window expected between July 27th and August 7th. Conclusion. Bitcoin is entering a potentially important transition period. While higher real yields and incomplete ETF demand recovery continue to limit upside, several indicators suggest selling pressure is weakening. Bitcoin's renewed reaction to positive news, shifting dollar dynamics, and fading long-term holder distribution point toward improving market conditions. The next phase may depend less on crypto-specific catalysts and more on global liquidity, dollar direction, and institutional capital returning to risk assets. For now, Bitcoin appears to be holding steady, waiting for the next major move. Join BigONE today and take advantage of the growing cryptocurrency market.